And tonight, the old investments versus the new. Oil markets are being turned on their head as the world's biggest oil companies are struggling with higher prices and sanctions in Iran, unrest in Venezuela, and bottlenecks in the United States. You'll hear from the chief executive of BP in just a moment. You'll also hear from a CEO of a Texas oil man who tells us what's happening in the basin. At the same time, investors are chasing the next big commodity, cryptocurrency. And this program will be live at the crypto conference where it costs thousands of dollars to attend and tickets have completely sold out. It tells us all we need to know about this revolution. Let's start, though, with the traditional oil industry. And oil, which has been trading at $70 a barrel, a level not seen since 2014. And the interesting reason, it's not because of a sudden surge in demand. Rather, it's about a lack of supply, partly because of US sanctions on Iran. And now France's Total says it could ditch its Iranian investments. Total says it will abandon a $2 billion project unless it gets a waiver from secondary sanctions. Those are a risk that the US, now it's backed out of the Iran nuclear deal last year. Total's chief executive has warned they would have to rethink if things changed.
Either we can do the deal legally, if there is a legal framework, and then we will proceed. If we cannot do that for legal reasons, because change of regime of sanctions or etc., then we'll have to revisit it.
Now, Total says it will stay in Iran if it gets a waiver from the US against further sanctions or secondary sanctions. And there's by no means any guarantee that it would get it, certainly not as a French company when the US has pulled out of the deal. You can see what's happening with the price of oil. It continues to rise, and it will continue to go $79, nearly $80 for Brent at the moment. WTI falling just a little bit behind. Not surprisingly, the chief executive of BP tells us these are uncertain times for the industry, all as the supply shortfall continues because of what's happening in Iran and Venezuela. Bob Dudley of BP told John Defterius he's glad that BP didn't rush into Iran.
There's a fair way for oil prices, I think of it. Good for the world. If you say 50 to 65, feels like both sides, consumers and producers, can live with that. We're off that fairway now. And, anything can happen here, but I think it's better when the industry works within a bandwidth of pricing.
Historically, Saudi Arabia and the other Gulf producers have stepped up when there's a dislocation because of geopolitics or conflict. Do you see Saudi Arabia still doing it even though Iran's in the mix here?
Well, the Saudis do have excess capacity, as does the UAE and Kuwait to a degree, and I think there's no question that if needed, I think, speaking with them, that they will bring that to the market. You've also got a quick response of the market in the United States with the shale producers who are responding now, and you can see activity going up, and there'll be increased production there. But there's a lot of dynamics right now. You look at Venezuela, which is sort of a human tragedy, looking at the country, but production falling very fast, and now the uncertainty of Iran. So we're in an uncertain period here. It's not necessarily just following supply and demand.
BP had a long history in Iran. You must be pretty pleased you decided not to jump back in when the sanctions came off.
I think it's probably best that we're not working in Iran today. We did have a history. The company was founded there back in 1908. But there's only so many places you can invest within a disciplined capital framework, and that one just looked difficult to us. So I think it's best that we've stepped back. And we have not been engaged really with Iran.
Bob Dudley with an honest assessment of why BP didn't go into the country. Unfortunately, it's also missing out on the West Texas shale oil boom. BP wants in. It's a very crowded neighborhood. Look at the map, and you'll see exactly what we're talking about. The Permian Basin down there over on the west side of Texas has become a victim of its own success. Everyone is pumping oil. The problem, of course, there's nowhere for it to go. Simply, yeah, it sounds extraordinary, but there's not enough pipeline capacity to get the oil to Houston, the Gulf Coast, and out into the wider market. It's a huge distance. Think about it. Texas is bigger than France. 500 miles or 800 kilometers from West Texas down to Houston. 9 hours by car, slower by rail. Todd Staples is the chief executive of the Texas Oil and Gas Association. He joins me tonight from Palestine in Texas. I have been there, sir. it is relatively remote, always a warm welcome in West Texas, but absolute boom time at the moment as these prices rise. And I think you'll agree, as the rig count rises, so production will continue.
Good things are in store for the Permian Basin in Texas. Texas today is responsible for about 40% of the entire nation's capacity. And with the level of investment that there is planning that is occurring, along with infrastructure growth and development, that we can continue to play an outsized role in the supply of oil and natural gas. The issues that we're facing today, takeaway capacity, congestion in the roads in that region, are all things that will require work. But the industry has a strong track record of delivering, and that's certainly what we intend to do.
Right, but this idea of the Permian Basin being overwhelmed by pipeline, by capacity constraints, needing to better ways to get the product out to the coasts and into the market. That's not a lot you can do in the short term. And yet, as I was just alluding to, if we look at the rig count, which is up 20% year on year, we can expect more potential production in the next 12 months.
We certainly can. The growth is going to continue in the Permian Basin. It's one of the most prolific oil and natural gas production basins in the world today. And the good news is that the industry has been planning. They recognize how important a role this region of our state is to the nation and the world. And many projects have been planned, more online. That project does need to be delivered to the Texas Gulf Coast and can be a continued growing factor of the worldwide supply.
So as we've seen, and if we show the numbers again, obviously you're looking at the West Texas blend as the price, $71 or 71 and a half, Brent at 79. As we've seen WTI go to 71 with the prospect of 75 and 80 ahead, are you seeing more investment? Are you seeing the wildcatters coming back, the banks being prepared to lend not only against future production, but also against installation?
Well, so in 2016, for example, there was almost $26 billion in just merger and acquisition deals only in the Permian Basin. So now you do see the massive level of investment. The companies are coming together. They're planning for developing the infrastructure, the schools, the houses, the hospitals that are needed to give that support structure to make certain that the future is going to be bright for a long, long time. And so we do see that occurring. It's an integral part of, as well as our port expansion that is occurring up and down the Texas Gulf Coast to accommodate this increased exports.
Finally, we hear that the U.S. is now the global swing producer, a role that used to be taken up by Saudi Arabia, of course. But the U.S. cannot be the swing producer in quite the same way because it doesn't turn the tap on as easily and it doesn't switch it off as easily. It's a market trend or a market effect rather than a government fiat. So do you see the U.S. as being the swing producer?
Well, what I see is this. There's no denying that ultimately supply and demand determines the level of production and prices. American consumers, worldwide consumers, are feeling the pinch right now because of tensions across the globe and in the Middle East. The United States is well prepared, and what we need here in this country to continue to play that role that's so important nationally are local, state, and federal policies that encourage continued investment and growth. Policies at the state level, infrastructure development, policies at the national level, a NAFTA with investment protections that will continue to make certain we can grow and expand. And tariffs across the world as well will play a big role in how much investment you see here.
Todd, great to have you on the program. Please, let's talk more about this as the price inevitably rises. Quick, in a sentence, your 6-month forecast for WTI price. We're at 71 at the moment. 6 months out, where will we be, do you think?
Well, I'm going to let the market determine that, but I can assure you the producers in the Permian Basin will do their part and they will increase the supply. Right. Good things are in.
You can't blame a man for trying. All right. Thank you, Todd. I guess that was